Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Here it is Monday morning. I just want to check and make sure YouTube kicks in. Hello, everyone.
Hey, there it is.
Welcome back
Yay.
to. It is Monday. It is September 30th, the last day of Q3 2019. This day, now keep in mind that stock settlement is 3-day settlement. There is some 1-day settlement, especially with things like futures. Probably starting as of Thursday last week, but Thursday, Friday, and definitely today, we're into what they call window dressing period, where fund managers and stuff that, the end of the quarter report will go out. There are some names that have outperformed. There's some names that have underperformed horribly. And fund managers, just to make sure that when those reports go out, the people that open up the reports and read them see that their fund happened to be a net buyer of the sexy names on the quarter. Vice versa, the fund will report that they liquidated this name that was getting absolutely destroyed, things like Netflix right now and Tesla and stuff. We're probably into that kind of window right here at the end of the quarter and the end of the month. And then also, too, we'll have the first 2 weeks of Q4 staring us in the face. And so we want to sort of temper our enthusiasm around placing too big a bets until we sort of see where the fund managers kind of think we are in the current economic cycle. And speaking of which, it wasn't a bad, through the daily brief, we took a little bit of time and reviewed the previous quarter. This is July 1st through July 12th, the first 2 weeks of Q3. And where did this sort of fund managers want to have their money working? And it was really interesting study areas of the market that the fund managers were avoiding like the plague, and areas of the market that they thought were going to outperform. I get the impression that the fund managers thought we were a little bit further along in the economic cycle. Here's technology, consumer services. I think the fund managers at the beginning of the quarter thought we were sort of in this window. But in reality, if we actually zoom out to the entire quarter, you can see that the market itself still is favoring things like utilities and real estate, which in essence suggests that we're sort of still in this part of the cycle. But on balance, pretty close. Looks like the fund managers were front running a little bit. So it's important for us to watch the first 2 weeks of the quarter just to sort of get a feel for where the fund managers kind of think we are in this huge cycle. And clearly, both the first 2 weeks and the entire quarter, you saw that materials and energy underperformed along with healthcare, which means we are absolutely definitely not in this part of the cycle. We're either right over here or we're right over here. The market, I think, feels like we're here. The fund managers, they're positioning themselves thinking that we're right here. So anyway, interesting conversation we had about quarterly performance sector rotation in today's daily brief. I always like to put together a cute little chart deck here just to sort of keep me on track, and you'll notice that I didn't have the quarterly performance. Actually, that's not true. Actually, that's what this conversation was. So I actually started out of order here today. My apologies, everyone. But in essence, here is the real estate ETF, and here is the utility ETF. And you can see, they're not rip-roaring bulls, but they are outperforming. Okay, so let's, my apologies, I did this sort of out of order, but that was an important conversation to have. And of course, if you are interested in sector rotation, that's one of the key concepts that we teach in our advanced program. We always like to start off these conversations with, risk on, risk off. What is the US dollar index doing? As everyone can see on this chart, this is a daily chart right out of the gate. We broke to new highs this morning. economic malaise coming out of Europe. That message hasn't changed at all. Brexit issues on the table here for month end. I don't know. In fact, actually, tomorrow we have Jamie on, our UK fundamental analyst, and he should give us an update of what the heck's going on over there. Did have some interesting negative prints come out on things like the Chicago Purchasing Managers Index came in below 50 today. So sort of more sort of worry from the sort of growth perspective right out of the gate this morning. On balance, and we've talked lots about this, there are some pretty juicy upside targets here for US dollar index. I would still consider this in a bull, and it's charging higher, and probably best for us not to get in its way. It also does talk a little bit about sort of risk on, risk off, in that, people, international money managers, if you will, they're still seeing a lot of incentive to buy US dollars and just park their money in like things like T-bills and just sort of ride out. They don't call it the fall for nothing, all that kind of talk. So US dollar index itself got a big boost, and of course, historically, usually when the US dollar is strong, that makes it very difficult for gold. Keep in mind, gold is priced in US dollars. So if gold just wants to stay the same and you have a big bump up in the US dollar, gold has to come down regardless of what the heck's going on in the industry. But we've talked repeatedly at length recently about how dangerous the gold market was looking, and for heaven's sakes, don't chase. And everybody here, I hate to sound like a broken record, but learn this stuff because it works. But what are we supposed to be thinking if we ever see the market smiling at us, right? And so there you go. Our worries, our concerns about, this market getting bitch slapped, they seem to be coming true. And then also, too, I threw on here, and it kind of sucks because I was hunting a short trade here on the gold. And I sort of showed you these charts. No, not that one. These charts at length recently, and the gold, it did pop into reload zones, but it didn't set up the way that I wanted it to. Boo, hiss, hiss, boo. It just hit Mountain Man and just collapsed. So I never did get my trade set up, but nonetheless, at the very least, I like the idea that we were thinking in the right direction. But if we also look at gold's buddy silver, and keep in mind, the silver traders, they are notoriously crooked. So, it doesn't surprise me at all. Silver, of course, what are you supposed to be thinking if you see the market smiling at you, that kind of conversation. But the silver market, they made this extremely difficult. This was just FU moves right, left, and center. But anyway, you shake it. Those M's have come in now. So, any sort of bullish enthusiasm there, that's right out the window for now until we start seeing W's again. On the flip side, and of course you've heard me talking about wanting to accumulate puts in the stock market, do have some going. Spend some time in the daily brief talking about trend channels and how we came down to a channel midpoint on Friday. We seem to be pivoting back up here. I also noticed, and I've talked repeatedly to you guys about this recently, I thought that this oil move was completely manufactured. Derivatives conversation, all that kind of stuff. And gee whiz, what a surprise. Oil's come back down and basically filled in this monstrous gap that was left open. As well, and we'll talk about it in a bit, Bitcoin itself has had some signs of uppy here this morning. I think we're a little bit early to call a bull here, but nonetheless, dead cat bounces kind of idea. I think that's completely realistic here. So if we actually put all of the pieces together in one of these kind of images, you can see yen, gold, risk off, bets. They're coming off here. The bonds haven't quite broken down. Like I said, that Chicago Purchasing Managers Index number came out very, very weak this morning. So I don't know whether bonds are going to tank the same way that gold and yen are, but you can clearly see these risk off proxies are off. Then if we flip over and we look at the other side, stocks, as we said, are catching a bit of a bid here this morning, rallying off at channel support. Some rhetoric coming out of political figures that maybe trade talks are back on and all that kind of talk. Also, too, we talked in the daily brief today about actual listing of international securities in U.S. markets and how the threat of non-U.S. companies listing in the U.S. market, those threats are being taken off the table. So as a result, risk on proxies to a certain degree are catching a bit. I like the idea of oil coming down into this level and turning. We spent some time in the daily brief this morning taking a look at the oil market and how it's at a very interesting level. You can see the gap fill, and then if you drill down to like lower time frames, you can actually see bottoms trying to come in here. We sort of thought that through sort of Tuesday, Wednesday kill zones, we should probably watch for some sort of pivot here. You can see the oil just as we're talking here has broken the new low, so it's not quite ready to turn just yet. But I'm keeping a close eye on this, and that'll be sort of my final sort of coup de grace that risk on is back on as the oil market is actually rallying again. So she's not quite there yet. Was looking a little bit more like a bottom an hour or so ago, but not quite there yet. And this might also be part of this sort of risk on, risk off proxy first 2 weeks, entire quarter. Again, thinking window dressing. If the portfolio managers are going to be putting out their mutual fund reports and energy is really down appreciably this quarter, I wouldn't be surprised if you actually saw some fund managers liquidating energy here into the close today so that they can show that they're either flat, they're not in energy, or they might even be short. So, long and short of it here, risk off proxies looking really heavy. Risk on proxies, I haven't got a bottom in crude just yet, but I don't have a bottom in the stock market either. What I'm thinking here is dead cat bouncy. And, if we apply that same sort of thinking, is crypto and Bitcoin part of that risk on conversation? You notice that Bitcoin's ticking up here, and it has over the past day or so. I spent a lot of time in the Broiler Chicken Show yesterday on Sundays, so go watch that if you want sort of a further conversation about that. Talking about how this is basically exactly 50% of this up move over time this week. So could we actually see that the market maybe overshot the 50% level and now it's just simply playing sort of an oscillation game around this level? Absolutely. That to me would be completely normal. So again, that's sort of like, stocks a little bit risk on. Crude, I think, is near some sort of pivot. It hasn't turned up just yet, so we still have to wait for it. And Bitcoin here, there's a weekly chart. If we painted a nice little inside bar here, rally peak up to 8,500 sort of idea and finish the week in that area, that wouldn't surprise me at all. So put it all together, I'm feeling like risk on is a little bit back on. Not really, pound the table, you got to buy it. More like, the short trades were done. Hunting new short trades here was kind of stretching it a little bit. And we talked about this, and I talked about it in the Broiler Chicken Show yesterday. Where the hell's the damn chart? Maybe I got rid of it. Was this it? Oh, yeah, here it is. If you were hunting short setups through the weekend through that, this is that 8,500 level. This was extremely painful. And you can see, bought shorts stopped. Bought shorts never really came in. Bought shorts never really came in. And that high just got busted again. So very messy looking price action through the weekend, and that's one of the reasons why I was sort of like, I don't know whether I really want to hunt shorts here or not. This level, this big orange line, is that 8,500 level, which I think is going to actually act as sort of a magnet through the end of this week. Finish off today's free offering. A couple sort of crypto related names that we've been talking about recently. The crypto related stocks broke down. And just full disclosure, everybody, you can see this Riot put in this W, broke it on Friday, and so I basically walked away from it. I don't have a position here now. We talked about Ethereum rallying 50% of its anticipated range. So worst case scenario, you got stopped at scratch on this long. And I did notice that there were some site OGs that actually shorted this up here and went long, like bear ETF. So congratulations to you guys. What I would mention, though, is that it wouldn't surprise me if we're still not done at this level. The stocks, like I said, they're actually enjoying a bit of a counter-trend rally here today. So, it's the way it goes. I mean, I had my plan. I took my shot. The trade's really over. I really shouldn't be even, watching this until a new W comes in. And that might take a month or two to develop. And same sort of thing on Ethereum. Wicks and tails like to be eaten. So I'm going to be watching. My hunch is we probably do something like this, right? And if this is actually a bottom, we should see these lows traded to, and then, if this is another bottom, away we go. So I'll be watching for that to develop over the next week or so as well. But nothing new altcoin-wise to be hunting right at the moment. Still just sort of sitting on my hands. I think the market in general is recovering from this failure. And if anything, like I said earlier, I'm thinking dead cat bouncy here now. Okay, I think I'll leave the daily brief recap at that. Have yourselves a great Monday morning. We'll see everybody again tomorrow. All the best, and bye for now.